Can markets go lower? Possibly. But we're in the zone where we should be utterly focused. My view is the bottom is in markets, but I can be wrong. But the point being is this is the time, the generational opportunity to buy into all of these themes. And I'll run you through some of that.
Bitcoin, the world's largest cryptocurrency by market capitalization, surged 18% to over $24,200 over the past 24 hours, even as fallout from the implosion of Silicon Valley Bank widened. Hello and welcome to Crypto Street. In today's video, Real Vision CEO Raoul gives us an update about his outlook for the economy in 2023 and the future of cryptocurrency.
When the issues of debt demographics came to the complete forefront of everybody's mind, and we realized we were stuck with a system creaking at the seams that's now broken. And it was a wake-up call for all of us to take control of our own finances and our own lives. And that's what Real Vision was all about, democratizing that access to information to give us all a chance in a world where the middlemen had let us down. And now it's up to us to figure this out. And the whole idea here about this 2 weeks of content that we're producing on Real Vision, it's something called How to Unfuck Your Future. Now, it's kind of a humorous title, but it's not. It's deadly bloody serious. We all know that there are some massive issues with the world economy today, particularly the Western economies. And they're dragged down by debt, aging demographics, broken political system, broken geopolitics, and a very complicated world. I've spoken at length about the issue average people have faced in society, and the average real adjusted wages, for example, in the United States, has not gone up since the 70s. So the American dream of everybody participating in a growing economy has just never materialized. And over time, I've shown and talked about the fact that what they did was take on debt to offset it. There's a whole thing that I did with Robert Breedlove on this, and it's on the platform, about the whole history of how we got here. But what we got to was this point where wages didn't go up, asset prices kept going up, and to fund the difference, people took on debt to try and make their American dream of their happy retirement happen. And that was the baby boomers. The actual reason why their wages didn't go up was very simple. There's too many of them. They all came into the labor force at the same time and competed with each other for jobs. At the same time of the rise of the computer and technology. At the same time, well, actually later in the 90s, of the rise of globalization, competing now with a Chinese and an Indian and a Vietnamese and a Pakistani and other labor forces. So wages went nowhere. People got angry, frustrated, and populism rose. People splintered left, people splintered right, looking for people to blame. The reality was, it was World War II and the rise of population that was the really big issue. And then we've got problems with the Federal Reserve and how they tried to deal with it, and the US government and how they've tried to deal with it. I'm not going to cover all of that today. What I'm going to talk about today is how to unfuck some of this. We're talking about the big issue. So the big issue for me is, how do you make GDP? GDP is a magic formula. It's basically population growth plus productivity plus debt growth. Those three things make GDP growth. That's how economies grow. Population growth, well, I think you know by now that almost every single population in the Western world, including Japan and China, is now shrinking. So that is an unprecedented thing for us to have to deal with. Now, normally you would have had immigration, but because we had so much immigration and wages haven't gone up, people said, okay, we can't really take immigration at that scale to drive GDP growth. Okay, so that was the decision people made, and I understand why. And it's very difficult to import a large population of people when the wages of the existing population are too low. So we can't solve population growth. It is a fixed. We know what it is. And immigration is not going to solve it. So therefore, we've got debt growth. Well, debt growth has been the engine of which we've driven everything. And we got to a point where debt is around, in the US, about 220% of GDP. That's private sector debts and government debts. So we've got to a very indebted world. Now, you can get more indebted, but I'll come into the debt side later, and it's something I've written up in great detail in Macro Insiders and Global Macro Investor.
The cryptocurrency, which was recently trading above $24,200, registered its largest daily increase in almost a month, according to data from TradingView. Earlier Monday, Bitcoin reached a daily high of about $24,500. The reasons for the upturn are still unclear, particularly as cryptos often decline during periods of unrest in financial markets. But the surge has come amid the sort of short squeeze that historically sends prices higher. Data from CoinGlass shows that traders liquidated $300 million worth of crypto positions on Monday. A full $140 million worth of these liquidations were Bitcoin liquidations, with $160 million in short positions. The Bitcoin rally comes as some investors are recognizing the fragility of the central banking system, according to Sean Farrell, head of digital asset strategy at Fundstrat. Bitcoin is leading the market because there is a cohort of investors that recognize the fragility of central banking and the solutions BTC offers, Farrell said.
But also let's look at the productivity side. This is the only dial that I think we can actually move now. If we can't really move debt growth in any meaningful way, and we can't move population growth, then productivity has to be the answer. And that is the focus, I think, of where this is all going. Solving productivity. So what is my thesis here? My thesis is that the debt service costs must be less than GDP growth. If not, it needs to be monetized. I don't think anybody else has really talked about this, but I went back and I wrote about it a lot in Macro Insiders, Pro Macro, and also Global Macro Investor in great detail. But basically, if the government is 100% of GDP in debt and the private sector is 100%, let's make the maths easy. Okay, if GDP growth, long-term trend is, call it 1.75%, maybe lower, maybe a bit higher, but it's around that. So if interest rates on the debt burden, which is 100% of GDP just for the government, is more than 1.75%, then GDP, which is all of the earnings of the economy, don't service the debt, so it has to come out of GDP itself, which means GDP shrinks or the rate of growth slows. Now, we've got an issue where we've got two sectors that are both 100% of GDP. This all broke when this started happening. So we've got two sectors now competing for GDP to pay interest. Okay, that would be a problem. We'd have a continually shrinking economy. But the Japanese figured this out a long time ago. The answer was to monetize the government side of the balance sheet. And what they're actually doing, and I think I've proven it in Pro Macro and Global Macro Investor, that all of the QE is essentially monetizing the interest payments every 3.5 years based on a cycle from the debt refunding cycle that started when rates hit zero in 2009. And that has led these 3 to 5 year debts keep getting rolled. The economy rolls over because rates get higher at the top, rates go up at the top of the cycle, the whole economy slows down. And eventually you try and refund at the bottom of the cycle, and that goes onto the balance sheet. And the difference between the GDP growth and the size of the debt is actually what goes onto the balance sheet itself, and that seems to equate to the interest payments. So basically, government debt growth as a percentage of GDP is actually, or in total, is actually just to monetize the debt itself, to pay the interest, i.e. you're borrowing more to pay the interest, and then that goes onto the balance sheet. That's pure monetization. That is pure devaluation of a currency without anybody really understanding it. And obviously asset prices go up.
So is it a good time to invest in crypto? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.